In this webcast, I will be describing some of the key trends in the global air cargo sector. Underlying demand for air freight over the past 12 months has been very poor. This is due to wider macroeconomic factors as well as the dynamics of the logistics market. The core market for air freight is that out of China into Europe and North America. This market has seen falling volumes since the beginning of 2011. The underlying reason for this appears to be the softness of Chinese export volumes. However, the varying level of demand experienced by shippers has affected their preferences for transport modes, with customers shifting from air to sea freight. This has depressed demand for air cargo substantially beyond what overall might have been expected. The supply-demand balance of the air freight market has been variable. However, it is noticeable that air carriers have been quicker to respond to falls in demand than, for example, ship owners. In our next slide, we see that from January 2011, air freight was growing in high single-digit percentages. Yet available FTKs, that is, the amount of capacity in the market, were growing even more quickly, at just over 10%. By May 2011, demand had begun to shrink, yet available FTKs were still increasing, if at a much reduced rate. A noticeably smaller pre-Christmas peak period, where volumes continued to shrink, was only mitigated by a sharp upturn driven by the launch of the latest iPad from Apple. The problem for the air freight market is that demand has shrunk, while supply has continued to increase. Between the period January 2011 to April 2012, demand measured in FTKs fell by 10.8%. In contrast, supply is continuing, with further capacity entering the market, particularly belly freight capacity in the Middle East. However, on the core China-Europe route, there has been recent major withdrawals of freighter capacity. This probably reflects the balance of the market. The next chart illustrates that the dynamics of different routes has varied substantially. In terms of revenue, South American routes have shown precipitous falls, influenced by the volume of the previous boom. In contrast, the Middle East has recovered from a shallow fall in revenue seen earlier in the year, with the market now turning up moderately. Overall, the market is clearly falling. Measuring the key routes in and out of China is less straightforward, as there appears not to be equivalent data. However, we can see from data from Hong Kong's largest cargo terminal, Hactl, that volumes have been largely flat or falling over 2011 and into 2012, although with much volatility noise around the trend. In our next webcast, we will be looking at profitability in the freight forwarding sector. For more information on our latest report, Global Freight Forwarding 2012, follow the link to the TI website.